Hello everyone and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to Motor Trade Radio. We're joined today by Derren Martin, CAP HBI's Director of Valuations, for our regular end of the month review of trade values. Also, as we're now midway through the year, we thought this would be a good opportunity for Derren to share some of the key trends he's identified in the first half of the year. So welcome back to the pod, Derren.
Thanks, Curtis.
How worrying is it that we're talking about the half-year point already, Derren?
I know, it just it zooms by, doesn't it? So, yeah, and I know we were on a call this morning for you. We're talking about November and Christmas.
Oh, no, so you're into year end already.
Yeah, we're wishing our lives away, yeah.
Very worrying. It's very, very worrying. But I say, at least we've got a bit of summer weather to enjoy in the meantime, haven't we, before we head back into the remainder of the year. So, I mean, without further ado, let's start off really looking at the month of June and what happened through that. We know that the headline figure at 3-year 60, which is down 0.1% or the equivalent of £25. But more importantly, how has this compared to previous movements for that kind of month and what you expected to see?
0.1% down. And that is a really strong month for June. It's the strongest June that we've had. If you ignore those two COVID years of 2020, when obviously everything sort of reopened in June and it was a relatively strong period, and then 2021, which was obviously crazy with values going up because of semiconductor shortages and you couldn't get a new car. If you ignore those 2 years, this is the strongest June since 2009. So it is and it's about 1% stronger than the average over that period as well. So it's a very strong month, and it's a continuation of a theme really for the last few months, and we kind of feel it's down to sort of demand in the retail market being pretty good. I mean, it's not through the roof. It's not another 2021 situation, but it is good, and that's mainly due to sort of interest rates sort of stabilising, inflation stabilising, and I think people have got used to the sort of the cost of living concerns that they're faced with now. So if you need to buy a car, you're still going to go and buy one. If you want to buy a car, you're thinking, well, I'm in this situation, so I'm going to go and buy one. Maybe you're going to downsize or buy one slightly older, but you're still going to go out and buy a used car. So that's kept it all relatively strong. And off the back of that, that's the demand side. On the supply side, there's 3 million fewer registrations in the last 3 or 4 years than there would have been without COVID and semiconductors. So you've got lowish supply and highish demand.
And I mean, we always, every time we talk to you, we talk about the importance of CAP Live. You know, we talk on our regular catch-ups about the month because of that still snapshot of the month. But, you know, we always talk about the importance of live data and as the market sort of changes throughout the month. Have you got any observations as to how prices fluctuated? Have they continued to firm up as we've gone through the month? What have you been observing?
The interesting thing for June, I think, is that although it's a 0.1% movement, you've got some that have gone down in value, and they don't all go down in value in one go. We move things throughout the month as we observe it. So you've got some vehicles that have moved well. I think the Alfa Romeo Giulietta diesel is our biggest drop this month, and that's over 10%. So, which is over £1,000 at 3 years old. So there's so many moving parts within those averages, and you have got models that have stabilised through the month. You've got some that dropped early in the month and then returned back to not moving. So on the face of it, it looks like it hasn't moved over the month, but it actually has. So if you're buying and selling vehicles during the month and you're taking live into account, it just makes sure that you're maximising what you're selling for, and that you're not paying too much for a vehicle when you're buying it. And maybe you've got a little bit of a head start over those who do only have monthly. But overall, that 0.1% movement, it hardly moved through the month. So it has been really stable. It's not like it dropped by further and then recovered. Since really the middle of May, it's the averages have hardly moved. But within that, as I say, there's all sorts of differences within that. We've got, I think, Seat Arona diesel went up nearly 7%, and that Alfa Romeo Giulietta diesel went down 10%. So make of that what you will, really. It's not a fuel type issue because one's gone up and one's gone down, but there's all sorts of different nuances in the market.
And Derren, turning to age bands, what trends did you see across the 1 year point and across older cars as well?
So the 1 year point, there was a drop of 0.2%. So very, very similar and very strong again. That's just about £100. That area of the market, pretty strong. I would say the only caveat on that, and we'll probably go into this, I'm sure, is electric vehicles. You've got some really keen new car offers as manufacturers chase the ZEV mandate. So that does affect some of that late plate stuff. But generally, the younger stuff has performed okay. At 10 years old, there's a drop of 2%. So that is quite a bigger drop compared to other age bandings, but that is only equivalent to £75. So it's not seismic there either, really. So we are also seeing, so when you look at some of those older cars, maybe a little bit more damage on, we are seeing that buyers are now buying them, whereas because they've got to pay a premium for a cap clean car, maybe. So it's quite strong all over, really. Whereas in the last sort of 2 or 3 months, it was cap clean, got to buy a cap clean car. Now people are realising that you might have to go down and buy a car in a average condition rather than a completely cap clean one.
And how did the various vehicle sectors perform? I'm assuming it was a good month for convertibles, bearing in mind the weather we've got.
So convertibles, they are still a seasonal vehicle, but maybe don't move as much as they used to. But they've gone up. Convertibles have gone up by 0.8%. And they've been going up for the last couple of months, and will probably stabilise maybe in a month or so's time. So you tend to get convertibles from sort of March onwards heading up in price, and then they come down in that sort of final quarter and over the winter. So that's been the strongest sector. Most of the mainstream sectors have behaved within sort of 0.5% of each other, really. So not too much going on individually by sector there, but obviously the devil's further into the detail than that. Interestingly, though, SUVs actually went up 0.2% at that 3-year mark, although they did drop slightly at the 1 year point. So they've performed okay as well. So and that's sort of medium SUV where there's quite a lot of volume, that's gone up by 0.3% on average. So that's kind of not too much differences between what's happening within the sectors apart from convertibles that have gone up.
And I mean, you mentioned the vehicles earlier, and it's interesting you made the point about those older vehicles now, but you talked about those two vehicles, one going up, one going down. Looking at fuel types, what are you seeing now? Because it was, by accounts, a very strong month overall for petrol and diesel firming up as well. But what are you seeing now in terms of this sort of step in between sort of petrol, diesel, hybrid, plug-in hybrid, and then EV in the sort of the relationships between them?
Petrol remains the go-to fuel type. That's what everybody wants, sort of, and especially if it's reasonably priced. The sweet spot is sort of 15, 18 grand petrol vehicles. That's what everybody wants. Petrol cars actually went up this month, 0.2% on average. Diesel dropped by 0.2% on average, so not too much in between those. Diesel has been coming down slightly stronger than petrol over the last few months. Hybrids, pure hybrids down 0.2% and plug-in hybrids down 0.5%. So again, fairly similar to each other. Electric vehicles have dropped by 1.7%. So you can look on that there's two ways of looking at it, really. From a negative point of view, they've dropped by a lot more than the other fuel types. But on the positive side, that is the strongest month we've had for EV values over the last few months. I think it's the same as we did in March. Since March, we've dropped values by more on electric vehicles. And I just stress this is averages. And there's the examples within electric vehicles really is that you've got some going up, some going down, and it's still really messy in that area. So it's just there are not all dealers are buying them. The sweet spot again on EVs is kind of sort of 15 grand and below. But as a caveat again on that, vehicles at that bottom end, like the Nissan Leaf, for example, they've continued to drop. They're now being squeezed by maybe more desirable vehicles that are now cheaper. So the Tesla Model 3, we're seeing those in the teens now. So for a little bit more on your monthly payment, you can go and buy something that maybe a little bit more aspirational than previously at that bottom end. So yeah, there's been lots going on by fuel type. I think electric vehicles remain the most fascinating area, but still really low in volume as well. I think they're around 5% of the volume when you look on sort of advertising portals. So, but it's what everybody's talking about. But yeah, just as some examples this month, the Corsa Electric's come down another 7%. The Nissan Leaf's come down 5%, and that's like nearly £500. The I-Pace continues to drop. That's come down 4% or £750. Porsche Taycan continues to drop as well. That's come down 3% or about £1,200. And then you've got a couple of... Sorry if you heard that. That's a lunatic on a motorbike going past. So yeah, the Mini Cooper Electric has gone up. Polestar 2 has gone up, and the Model S has gone up. So lots going on really within that EV world. So and that's again another reason for Cap Live is just to look at the devil that's in the detail there.
And that wasn't an EV going past, was it? That's the thing we're recording in this warm weather, isn't it? It's the biker boys are out and the windows are open. But no, and it's fascinating. I think you were going to you've covered my sort of follow up question there around that BEVs, because you say there's some. I think Chris mentioned it. We caught up with him last month that I think one out of the one vehicle that actually gone up, which I think was the Mini EV, had gone up in value. And there was a certain proportion that had stayed fairly stable, and then others had fallen. So it feels like there's a bit of firming up for the right models in that EV sector.
Yeah, definitely. And it's kind of some vehicles that are strong. They now look very reasonably priced as well. So I think there's some definite opportunities there. The Model 3 is always a benchmark vehicle. And that remained stable this month, didn't move. Cupra Born stayed level. The Ford Mustang Mach-E stayed level as well. So you've definitely got some stability in that EV world. And I think dealers that aren't dipping in now, I can understand their sort of reluctance to, because they've had their fingers burnt in the past. But I think, now's the time to probably go in and look at some of those vehicles and stock the odd one or two if you haven't done before, because if you hit those sweet spots in the teens of the pricing, then I think they'll move relatively quickly off forecourts.
And every month, Derren, you poll the views of the auction houses, and you've already mentioned that demand was pretty good, especially from those essential purchase buyers who have stayed in the market. What would the auction houses saying about stock levels?
Stock level wise, we had almost a third of them saying that they'd decreased with their stock levels. So I guess we've come away from the plate change month of March now. So any sort of uptick in stock from there has probably waned. So that's starting to drop. But 50% of respondents said that it stayed level. So it was a little bit mixed there. But yeah, almost a third seeing stock levels drop, and that's what's helping to keep prices high. We've seen conversion rates improve, and so almost a half of respondents said that conversion rates had improved this month. Last month that was only 15%. So so there's definitely some improvements there, but part of that will be down to stock levels decreasing. And then on from the auction companies with regards to demand, over a third have said that demand increased through the month. Over sort of almost 80% of them seeing it either level with last month or as an improvement. So I think the auctions are in a good place. Anyone remarketing vehicles, whether it's through the auctions or direct, I think they're doing well at the moment, and making reasonable returns because the demand in the consumer market is there, and dealers need to stock up.
You're listening to all the chatter that matters on a special weekday episode of Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising.
I mean, Dan, we said right at the start, thinking about, we're at the end of June now, mid-year point, where, there's a bit of reflection on what's happened on this year so far and what to expect. I mean, looking back to over this course of the first sort of 6 months, and, I think when we spoke to you back in January, it was kind of thinking about this. Are we back to a normalised seasonality? We're out of that bounce of COVID. What would be your main observations around that sort of valuations over the course of the first half of 2024?
I think if you have to summarise it in a sentence, it would be that it's been healthy, but not overdoing it. So it's been quite a strong 6 months, better than we probably expected it to be after what happened in the final quarter of last year. Dealers that we speak to, they're not doing cartwheels and celebrating, but it's kind of okay for them. It's good. We've seen some drops in the last couple of months prior to June of around just over 1%. Just under 1% in May, in May's Cap Live, and then slightly more than that previous month, 1.5%, I think, in April. So those were the 2 months where there was a little bit of a realignment. Apart from that, we've had a really good time of it. February values went up. January they hardly moved. Obviously now we've gone a 0.1 down overall. If you take into account sort of plate uplift, so by doing that, what it means we're comparing a 3-year-old vehicle now with a 3-year-old vehicle at the start of the year. An exact sort of replica vehicle for on average, values have gone up by 0.2%. So that's obviously not what you would expect. But cars usually depreciate, or they devalue as they get older in their life cycle. Demand and supply dynamics come into play. So yeah, it's been a strong half of the year. Dealers doing okay, and yeah, it's kind of, you look at it, and when I look at the charts on this, you look at previous years, and we've had this before. We've actually had it last year. We were in a very similar position at this stage last year. I know we all know what happened in the last 6 months. Values started to drop and then dropped pretty dramatically in the final quarter. But we're not expecting that this year. But if you look back at all previous years, it's always the last 6 months, which is more volatile than the first 6 months. So you need to keep really close eye on things. But yeah, it's been healthy. Certainly, the dealers that we speak to, we speak to dealers every day. They're doing okay. And consumer demand is there, and it does seem as though we've got over those sort of that difficult period of the last quarter of last year.
And finally, Derren, what's CAP's view on prices, how they'll perform as we enter July? Because I mean, it's interesting what you were saying there about the second half of the year is more volatile, and July there's actually a lot going on because we've got this good weather, we've got the Euros on at the moment, we've got the start of the summer holidays, the school summer holidays, and we've also got this little event happening in a couple of weeks' time with the general election. So how's the forecasting looking for July? What are you expecting to see?
Forecast that England won't go very far in the Euros based on what I've seen so far.
Curtis has been throwing cups at the TV, by the way, Derren.
Yes, yeah. No, I'm with you there, Derren. I don't think that's going to trouble the market for much longer.
No, hopefully that will come back to haunt me, that sentence. But yeah, let's see. But yeah, I think overall, we when you look back over history, we always get asked, why, what's the election going to do to used values, sporting events? Does everyone go and sit in front of their tellies and nobody goes out buying? It doesn't happen. We've got the Olympics, so we're not seeing any downturn from any of these events. When you look back at history, there is no downturn from it. You might get a lull when there's an England game on, and but people will still go back out there. So I can't see any reason to predict for July anything too dissimilar to what we've seen over the last few weeks. When you look back again at our sort of historical data, the average drop going into going through July is generally just over 1% down. Also, when you look at it, July can be similar to June. So I can't see it dropping by 1%. I think values could even go up slightly. If they don't, it will be a slight movement down and could be, again, very similar to June. Again, I'm talking averages, and there will be lots going on, especially in that EV world. And obviously, I gave some examples of cars that have gone in different directions as well. So it will be down to sort of supply and demand dynamics and how keenly priced they are at the moment. But overall, I can't see any reason to expect anything other than what we've had. Supply levels aren't going to start increasing until we get obviously into the plate change month in September. So supply will be almost thin on the ground. Demand will potentially drop away because of summer holidays and people going away, but not massively, and that doesn't really have a huge effect. So I think the dynamics are fairly well balanced there of supply and demand, and I think we'll see a similar sort of a similar movement to June, but maybe even slightly. It could be an upturn.
Yeah, it's going to be an interesting period, like you say, this next quarter, and then as we head to that fourth quarter of the year, as we talked about quite a bit around the ZEV mandate and other influences on the sector. But I think it feels that way at the minute that we're in a fairly stable, positive area. I think values firming up, but as you say, as always, the devil is in the detail behind it. There's some up, some down, some a little bit stronger, weaker than others. So one that, as always, keep an eye on the CAP Live when where you can, because that's, as Derren said right at the start, you made a good point that a car can go up at the start of the month and then slow down, fall off by the end of the month. So it's key to keep an eye on the daily activities, isn't it?
Yeah, definitely. Yeah, and I mean the ZEV mandate, you've mentioned it a few times, I know it's been in the press recently. It's boss of Stellantis talking about it and all sorts of things going on with there. That's going to be fascinating for after the election, which is the next 6 months, what happens there. But there's not many manufacturers that are even close to hitting that 22%, even when you take all their brands into account. So there's going to continue to be some strong new car offers. I can't see that manufacturers can hit those targets without cutting back on ICE. So does that strengthen values in those areas? So yeah, lots of things going on really.
Yeah, lots of key, right? I mean, as always, Derren, it's great to have you on and appreciate you taking a bit of look at the year to date and a bit sort of a lens in terms of what to expect. And as always, as if you want to take a deeper look at the editorial and the detail that sits behind what we've been talking through with Derren, then do go over to cap-hpi.com website. You find the full editorial for cars there, plus other editorials, whether that's LCV or bikes, and future forecasts as well on that same site. If not, just check out Derren Martin on LinkedIn, and I know you've shared it, haven't you, Derren, this morning for people to read it there.
Yeah, it's available on there, yeah.
Well, that's all for this special weekday Motor Trade Radio podcast. Many thanks to Derren for joining us. We're back with all the big car retailing headlines this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.